President Lee is saying that the BOK did the right thing when it held rates steady instead of cutting rates because that would boost the property market further. He said the property market is a ticking time bomb. What's your take on whether or not the property sector is in fact one of the considerations for your monetary policy decisions?
Yes, definitely. Property prices, especially in metropolitan area in Seoul, affect the financial stability. And price stability is our mandate, but also given that the inflation rate is close to 2%, we achieved our price stability goal. Now we have to look at the financial stability as one of our conditions. So there is a trade-off of the how much we have to provide interest rate cut to provide stimulus to the economy. On the other hand, we have to also consider how this expectation of interest rate cut affect the land prices, especially housing prices in the metropolitan area. So we are actually juggling these two objectives.
So given that the president thinks it is a ticking time bomb, are you hoping to see more measures from the government to rein in the property sector before cutting rates further?
I think from a Bank of Korea's perspective, we don't believe that the monetary policy alone can control the housing prices. But on the other hand, we are mindful that ample liquidity wouldn't throw the fire to the real estate market. We need to coordinate. There are a lot of government policy has to be coordinated, not in the short term, but in longer term perspectives. And I think government is considering new supply policies together with many other policies. So we'll see how it's going to affect. I don't think that it's going to have a very short term impact on the price itself, but at least I hope to see the slowdown of the rapid increase of the housing price in metropolitan area.
So rate cuts are still on the table. Some say why? Because when you take a look at GDP, it's come in higher than expected, and trade looks pretty resilient.
Yes, but if you look at our growth focus at this moment, in 6 months ago, we forecast that this year's growth rate is 0.9%, well below our potential GDP growth rate, and 1.6% for next year. We will have a new forecast released in 2 weeks later, and we'll see how much is going to be, there is upside potential, so how much is going to be revised. And after that, we probably have to decide how we're going to adjust our monetary policy. But at this moment, given the negative output gap still, our official position is that we will maintain the easing monetary cycle, but the magnitude and timing of the cut or even the change of direction will depend on the new data that we will see.
You talk about how growth is below potential. What is potential? Where do you hope growth will be?
Yeah, at this moment, because of the rapid aging, our potential GDP growth rate is probably in between 1.8% and 2%.
Let's take a look at the bond market because it seems to be sending a different signal, right? Yields have been surging to levels perhaps that suggest that, rate cuts are no longer needed and perhaps even a rate hike may be in the making. Is the bond market, are the bond traders misguided in thinking that?
I think there is some section of the bond market traders who believe that's so. But I think at this moment, our bond market yield react not only to the domestic factors, but also global factors, such as the possibility of the U.S. Fed decision and also the dollar strength. For example, like 6 months ago, many market participants believed that dollar will be more weakened, but it looks like there is some revision of that view too. So I think that's the difficulties. Where our bond market is now reacting not only domestic factors but also international factors. So we have to consider both. Are
you concerned? Is there a need perhaps for the BOK to implement measures to rein in the yields that are surging at this point in time?
Yes, definitely, because that will affect our monetary transmission mechanism. You know that we have cut our interest rate 100 BP from last October, and we was easing cycle. But from last August, the rise of the housing prices in the metropolitan area was way above our expectation. That dominated our concerns. But now with the new government policies and the new, especially after the trade deal and the investment package was agreed with the U.S., we have to now see how much the upside moves in our economic activities too. So probably in 2 weeks later, when we see our new economic forecast, we have to revisit these issues again.
The trade deal, any thoughts on it? Was it a successful trade deal, you think? Beneficial to Korea?
I would say that it was a good development that both leaders has agreed on the trade and investment packages, which helped to reduce the bunch of the uncertainties regarding the tariff. After the summit, our working level officials refining the MOU and the fact sheets. And from Korean's perspective, in order to implement this deal, we need parliamentary approval and also the enactment of the new law. So we have to see. But I think at this moment, what is important at this moment is both United States and Korea, has to find a project which is commercially viable and also win and win for both countries. In my opinion, I think it will be really nice to see some joint ventures which combine the strengths of the United States, which is strengths in basic science, with the strengths of Korea, which is strengths in application and manufacturing technology.
One of the key focus has been the $350 billion investment fund in the U.S. Mm-hmm. That has been the reason cited for the weakness in the won. Mm-hmm. Negotiations have concluded, yet the won is still among the weakest currencies in Asia in the last 3 months. Why do you think that is so?
I think there are too many factors in the last 2 to 3 months which affect our exchange rate. One is the AI stock prices, volatility in AI stock prices, related stock price in the United States, which affect our stock price too. And the shutdown of the U.S. economy, which make the many data unavailable, and there is uncertainty about the U.S. Fed policy and the dollar strength, and the new Japan administration and what kind of macro policy they will do, which affect the weakness of yen and maybe the future directions. And then also, as we discussed, that the agreement in the APEC summit in Gyeongju in Korea, that includes the U.S.-China trade relationship and also U.S.-Korea trade and investment packages. So there are so many factors at this moment. And then I think I need to see the fog to clear before we see the new direction. But as you mentioned, I think our market, in my personal opinion, is excessively sensitive to those uncertainties.
So given the fog that you mentioned, that depreciation in the won, is that too excessive, or is that actually reflecting the fundamentals of the Korean economy?
It's very hard to judge at this moment because there are so many fundamentals are moving around, and especially the factors that I mentioned. So I need to see how this whole uncertainty will go in the future direction. But on the other hand, I say that this is not I have less concern on financial stability-wise, because these days the Korean won exchange rate move was mostly dominated by the domestic investment abroad. So residents has investment. So in that sense, our foreign currency debt level is actually stable, is not big, and all other indicators suggest the strength and soundness of our market. So I'm not worried about financial stability-wise, but in that sense, but on the other hand, because of the large movement of the resident portfolio, there is a volatility in the exchange rate itself, and it can be excessive, but we have to see it. Yeah.
So as it stands right now, no reason for the BOK to intervene to support the level of the Korean won?
Nice try, but I won't comment on it.
There's no fair value of the Korean currency at this point in time?
We see the volatility, and when we see the excessive movement, we are willing to intervene.
Some say the excessive movement is actually seen in the stock market.
Yeah.
The Kospi in excess of 70%. Is there reason to be concerned about the surge in the stock market in Korea?
No, if you look at our price burning and or the PBR, or price book ratio, even with the heightened increase of stock prices, still our PR is 1.1, well below the other countries' level. So overall, I think I don't think that our stock is overvalued that much compared with other countries. But having said that, definitely the recent increase of our stock price is led by the high tech, especially semiconductor industries. Definitely, there is a good news that semiconductor is doing much better than what we have expected. But on the other hand, our stock prices in semiconductor won't be free from the stock prices of technology stocks in the United States. So volatility will continue.
Are there hidden risks? Because as we talk about how the markets are driven mainly by the AI theme, you know, if we see an unraveling, that could be a lot of pain, especially for domestic retail investors in Korea.
Actually, that was a hot topic when I was in BIS last week, and how much the stock price generally, especially in this Magnificent Seven or the high technology stock price has overstretched. So it's going to be very hard. You know, there's a lot of discussions. It will be very hard to know which view is correct. But I'm a little bit, relatively speaking, I'm a little bit optimistic and less concerned. Because if you look at in Korea, in AI sector, for example, Korea is very strong in hardware as well as software. So there is a lot of discussion who's going to be a winner in AI competition. But whether this is OpenAI or the Google, or, all these things. But whoever the winner, and it won't change the demand for the hardware, for example, semiconductors. So we see that recently we see the huge demand for the high quality chips such as HBM, but at the same time the demand for the legacy chip has increased significantly because there is a more small device need AI, and you see that the many physical AI require a lot of chips. So in some sense, definitely there will be a volatility in AI and there will be a winner and losers. But if I look at from a Korean's perspective, since we are quite competitive in hardware as well as software, in some sense we are diversified and we will be affected but less affected than others.
It's hard to talk to a central bank governor without talking about the Fed. Yeah. How closely are you still watching the Fed, or is there a sense of decoupling already?
If you compare the period of the 2 and 3 years ago, when U.S. had 4 giant steps and inflation highs globally, and Fed increased interest rate quite rapidly, compared with that period, we are much decoupled. Okay. But on the other hand, U.S. is a leading country, so whatever the U.S. do will be affected.
The thing is, people are watching the trajectory of Fed movements, and some say perhaps it could cut in December. Myron saying, you know what, the Fed should do a 50 basis point cut. If the Fed does cut, does that provide you enough, room to cut your own rates?
I think market has already, I wouldn't comment on it, but market has a certain expectation of how much they will cut. So whether they will cut more than the market expected or not will affect it. But in general, definitely the lower interest rate in the United States will give us some more room, leeway for us to have a more independent monetary policy through the exchange rate channel or through the bond market channels too.
Of course, the Fed has not cut as much as people anticipated, and of course that's led to a resilient dollar. Is that a headache for you?
I think the market's perception and expectation that the dollar will be weakened, and when they actually expect the Fed will cut rapidly. But given the October's, the Fed decision and the press conference, I think people are probably adjusting the magnitude a little bit. But unfortunately, because of the lockdown, I think we haven't seen many new data. So there is some uncertainty. So we have to see how it goes.
Governor Rhee, despite that resilience we're seeing in the dollar, there's been a lot of talk about debasement. Yeah. How people around the world, countries around the world, are pulling away from U.S. assets. Do you see debasement happening?
No, actually, I think we have discussed this quite a lot. But actually, if you look at the actual capital flows in the last 6 months, I don't see that there's a lot of talk, but there's no real movement away from dollar. But on the other hand, I think it's not just the U.S., but there is a concern on some unsustainable paths of fiscal policy in advanced economies, not only the United States, but also major European countries. So definitely there is a concern about the fiscal policy implication on the safe status of the government bonds. So that's these issues that we usually discuss at the BIS.
And of course, the concerns are that the world will pay for it, given their addiction, they say, to U.S. assets and the U.S. stock market. We have Gita Gopinath talking about an unraveling that could cost $35 trillion. What's your take on that?
I think there is some truth that in the last couple of years, the portfolio of the many countries are a little bit too much exposed to the dollar because the U.S. stock market is booming. And if you look at the technology development, it's mostly led by the U.S. companies. So I think there is a need to diversify. But the question is where to go. So that is why many people have some have headaches at this moment.
Just one final question, Governor Rhee. What's the biggest risk for the Korean economy right now? What's keeping you up at night?
So geopolitical tension, and I think our domestic stability is now much improved, and the economy is on the recovery path. But we are concerned that any sharp movement of geopolitical tension, trade tension, other things will affect us because Korea is very much an export-oriented economy, and we are very much heavily dependent on some specific high-tech sectors. So geopolitical uncertainties and trade tension will affect us very much.